Good morning, traders. Sunday morning it is, 4th of May, 11:16 a.m. And the intention is to quickly take a look at what happened to the market last week. And based on that, how can we position ourselves for the week ahead? I will be bouncing off our price analysis of these charts alongside RRG graphs from the Strike Analytics platform. So, first and foremost, none other than the Nifty chart itself. I have the weekly and the daily time frame. I'm using the next price and the next RSI indicators. By the way, the new indicators they come with positive divergences and hidden divergences as well. So that's an added benefit for our analysis, visual analysis. Step number one, weekly chart looks good. We've got 3 weeks of positive hiking. Our momentum indicator, which we are taking from a combination of EMAs of RSI, has started to bend up. It's in fact had started to go up quite some time back. And now prices are following suit. It is a bounce back and it's looking good. Nothing more than that. If you go by resistances, of course, a fractal low was somewhere there, and more or less in this area, we can expect some kind of resistance. And if I drop a retracement of this entire fall, it's more or less close to that 50% mark. So where the Nifty lies right now, the current highs of close to 24,700, 750 are kind of a decent resistance. So weekly, signs of bullishness are there. It is a bounce back. It is not a bull market chart, which is 45-degree angular on the upside. And so bullish, but cautiously bullish. The interesting point is from the daily time frame. The daily is well established when it comes to the EMAs of both price and RSI. If you can see, and that's a good thing about our new indicator, it had formed a tiny little 3 bar RSI divergence on the daily time frame. We had an HHGB on Thursday, and then Friday's drama. Now these are Heikin-Ashi charts. That's my default charts, but I would, just for the next few minutes, would change it to the bar chart to just, understand what happened on Friday's trade. It went way up there and kind of slipped. So what's going through is the market has given us a very nice, sharp recovery, bounce back. No one had expected this. After that, it's taking a breather, consolidation. And it's made some kind of a highs. Every time it has gone there, it has come off. So it's creating some kind of a short-term resistance. Now, last week, once it went above that and slipped, it was not a big slip, so okay. And then Friday, it was a beautiful breakout, almost 250 to 300 points rally for the Nifty futures, just to disappoint towards the close. And so if I kind of look at price and only price, this is not a very good close for the Nifty on a daily basis, though the weekly charts are pretty well poised. So the cautious or cautiously bullish stance from the weekly stays. And the important thing would be, going back to the Heikin, what happens to the daily? Was this a breakout failure? How will we confirm this? If Monday, Tuesday, we see a slip below Friday's low, a close below Friday's low, then definitely things will start to slow down. Maybe this 3 bar divergence will probably get triggered. So levels to look out for, number one, would be last Friday's low, breach of that low, close below that low. And I will, kind of go back to last Friday, that's this one, and that Friday's low. So these are the two levels one can look out for. As long as this low is not breached and closed, we can expect some kind of a short-term range-bound market, but we have to take case-by-case basis, level-by-level basis. So strategy going forward, or should I say, what is the view? And based on the view, what should be the strategy? View should be cautiously bullish because of the trend, cautiously because of the way the price is behaving. And of course, we are dealing with a bounce back market in a after a significant fall. So that's the view. Strategy should be do not go aggressive long. If you're a long only trader, wait for proper, decent, high conviction setup. Then only go long. Just don't compulsively force yourself to take trades. If you are into the derivative segment, then you can look for some short trades. In that case, I would suggest, go for shorts where you have at least the momentum on the downside, right? We'll take a look at the sectors if we find anything worthwhile, which is already showing signs of weakness. So that's the view on the overall markets, that is essentially from the Nifty. If you take a look at the mid cap and the small cap, first the mid cap, and I would like to, bring your attention to last Friday's big sell-off range, this one. If you notice, a lot of drama has happened this week for the Nifty, but it has not closed beyond the high or beyond the low. This date, by the way, is 25th of April. Let's keep this back of our mind. With this, if I come to the CNX mid cap, this is your 25th of April. And the index, the pack has never come close to the high of it. On the other hand, it's trading close to the low. In terms of our elemental readings of the momentum, the trend, I also have the super trend in place. Everything looks fine, and it looks like a symmetrical triangular formation, like a pennant, which is a sign of slowdown after the rally. The weekly charts are slowly improving. So more or less, the reading is a positive chart slowing down. But you have to keep in mind how the Nifty behaved on Friday, and the fact that Nifty went above 25th April's high and mid cap could not. Small cap could not. In fact, small cap has started to give us a negative hike in. So I feel that if the market fails to hold on to these highs, and if we see 100, 200, 300, or even more than that kind of a correction coming early this week, then it's the mid and small caps that can see some selling fast. So keep an eye on the small cap, or should I say, if you're a long only trader, try not to pile up small cap stocks. Now let's come to the sectors. And with the sectors, we'll take a look at the RRG graphs. We'll begin with the Bank Nifty. Let's go to RRG graphs first. What I've done over here is I have taken the Nifty 500 as the denominator, as the benchmark. I've taken the weekly time frame, and I've kept a count of 8 weeks. Why 8 weeks, you may ask me. If we go back to the charts and we open the chart of Nifty, it was this low where the market gave us the first bounce back, a crazy sharp sell-off which did not last, just lasted for a few minutes, that Monday huge gap down, and it recovered big time. So I'm interested to know that after this bottom, how many weeks have passed? And I get the count of 8. So 8 weeks since this bottom. And my interest is all throughout this 8 weeks, which sector has performed how and where are they placed in terms of their RRG performance. So I see there's quite a bit of names in the leading quadrant. Let me sort in terms of percentage change, and I'm not surprised to see Nifty Bank, Nifty Private Bank, PSU Bank right at the top. Because if you remember, it was the Nifty CNX Finance which hit an all-time high first, I think 3 weeks back, and then it was followed by the Bank Nifty, fueled by the private banks. So the financials, the finance, the private banks, the Bank Nifty are the one which had shown leadership. And that's why they are right on top over there. I would like to see how are they individually placed on the RRG graph. They are in the leading quadrant. They are slowing down a little bit. That is, their momentum of relative strength is slowing down. Private bank shows similar kind of a fall. The PSU bank is giving us a different kind of a reading. The PSU bank seems like that it is trying to do a catch-up game. I'll add up Nifty Financial Services also. It looks very similar to the Bank Nifty. By the RRG graphs, it means they have been outperforming the CNX 500. That's number one. And recently, over the last 2 to 3 weeks, they might be slowing down. With this understanding from the RRG graph, we should go to the real charts. Take a look at the Bank Nifty And we can clearly see a symmetrical triangular kind of a pennant kind of a slowdown consolidation after the recent rally. Remember, if we take a look at the weekly charts, you had this breakout. In fact, what I should do is I should drop a rectangular kind of a box over here, and this is where you had the breakout. The breakout is holding so far so good, pretty well. In terms of Heiken language, the Heikens are pretty positive. Trend momentum is pretty good. This is a bullish chart. And after the recent rally, it is buying some time. So any kind of a breakout from these levels will only fuel further, buying impetus. It's just the fact that maybe prices had gone up too much, too quick, and so it is consolidating. And it's fine, let it consolidate. View, bullish. Cautiously bullish, I won't say that because it's essentially clearly a sign of consolidation, short-term consolidation. Remember, Bank Nifty is predominantly fueled by the private banks. They enjoy the maximum weightage. So private bank and Bank Nifty will go hand in hand. And for any kind of a slowdown, if we get some kind of a breakdown of this consolidation, then keep an eye on which are the private sector banks which are doing that. If you take a look at the PSU bank, you will see that they are nowhere close to their respective all-time high. They were nowhere there. That's my phone. Sorry for that. I'll do good if I put it on focus for an hour, isn't it? All right. So the PSU bank, where it's nowhere close to its previous, its respective all-time high. So it's trying to do some kind of a catch-up game. Trend momentum seems to be fine. It's slowing down a little bit. There were not any strong signs of divergences. It needs to deal with this crazy, wild range. It's not that great, to be honest. The recent leadership from the banking pack has come from the private banks. So we might as well focus there. The top 3 or 4 PSU banks, you can keep an eye there. If you get a deeper retracement, a retest of the previous high, and then some kind of a reversal, why not? Keep an eye on them, but I'm not too impressed by their weekly performance. What's next? Let's go to the RRG graph and take a look at who else is there. Oil and gas is there. So oil and gas and energy will more or less have a lot of, overlapping stocks. So oil and gas has just entered the leading quadrant. It's gaining relative strength. So essentially, if you find the Nifty holding and, kind of showing bullish move, you should look for opportunities, long opportunities from oil and gas. There's a bit of infrastructure which is giving me the same thing. FMCG just entering, commodities losing off a little bit, and then metals. So we'll focus on oil and gas and metals here. Oil and gas is essentially, as I said, the CNX energy pack. And if you take a look at the CNX energy chart, number one, after the huge sell-off, it's just a bounce back. Number one. Things are slowly improving on the weekly chart, so the view remains same as that of Nifty, cautiously bullish. Let's come to the daily chart. After the recent sharp revival, again, a descending triangular formation. And it's kind of okay, no problem there. We need that breakout. So because the CNX energy, oil and gas on the RRG graphs are on the leading quadrant, in that leading quadrant, and it's gaining relative strength. RRG graph is telling us if you get breakouts from this pack, go for it because it's showing strength. When we come to our price, going forward, where can we see a breakout? Essentially these kind of levels. So look out for the top few energy names and see that are there any stocks which can give us that breakout or not. On the other hand, if these lows are broken, if these previous highs which are now lows are broken, if the Nifty comes down, then probably they will start to slow down. So energy, banks, private banks, finance should be there in your watch list. If the market shows strength on the upside, where should I look to buy? That's the pack as of now. Metal, if you had noticed, had dropped its relative strength. And this is not an easy chart to make sense out of or even trade. Because of late, it had spent a lot of time consolidating. After this kind of a huge consolidation, huge in terms of size as well as time, when you finally break out, it should lead to equally big moves, which it did not. Mercilessly led to a failure of that breakout, and now more than 50% of that sell off has been retraced. So it's crazy. It's actually very difficult to figure out or ride the trend because trends are very short lived here. Now, if I take a look at the weekly chart, our trend indicators are predominantly negative. We have an HAGB in last week, and RSI is kind of improving. We have a disconnect here. We have a disconnect between these two. So it's likely to stay choppy, volatile. You should be open on both the sides. If I come to the daily time frame, RSI, the field from the RSI is very flattish, and the field from the price is also very flattish, though the super trend had improved. So, it's not very strong, high conviction, bullish or bearish view. Anything can happen. Considering the weekly trend is negative, considering the higher time frame is negative, I will always put more faith on the higher time frame and look out for shorting opportunities from the metals. I can see my Bollinger Band is pinching, which means be prepared. You are going to get some kind of a breakout. Sadly, we do not have that clarity which way. Heiken Ashi also cannot give me that clarity. Some positive Heiken or a negative Heiken, and the clarity starts to, appear. But keeping an eye on the weekly, this is one pack I would like to keep on my watch list for a prospective, short opportunity. Let's see. We will see how it plays out. Moving on to the improving quadrant. I personally like the improving quadrant quite a lot. That's where your PAC energy we had spoken about, that's oil and gas, a bit of MNC and media. Media doesn't make much sense. It's the healthcare which is in the weakening quadrant. And if I take a look at Nifty Pharma, it's in the lagging quadrant. Again, pharma and healthcare, more or less lots of overlapping names. If you take a look at CNX Pharma, this is interestingly important. Number one, of course, wild swings on both the sides. Who knows what's going to happen? Higher time frame, kind of turning around. And we've got a hike in positive for 3 weeks, just like the Nifty. It is a bounce back. The current highs more or less merge with the erstwhile lows. So, make or break, interesting, important juncture for pharma. Daily chart is cooling off. Trend and the RSI, EMAs are all kind of positive. These kind of charts should ideally open up on the upside if everything holds well. RRG graph, however, is singing a different tune. RRG graph is telling us it's a lagging sector, it's a weak sector, which means that if price gives you a breakdown, go for it. It's also telling us if price gives a breakout, be careful on the long side because it's an underperforming sector. So understand that, give some importance to that RRG reading, and I will keep this as make or break and putting some faith on the RRG graphs. If it breaks, this is where my shorts will start to, I would start to look out for shorts here. So pharma and metals are where if it breaks, that's where I'll be looking out for shorts. IT, of course, is the second most important sector, and this RRG graphs has been one way, no confusion whatsoever, means a clear sign of underperformance. Let's take a look at the chart, and you would see a one-way sell-off, clean trend, RSI readings beautifully negative, going through a 3-week bounce back. Daily chart, not bad. Daily chart needs to deal with these levels. Probably it will take time, step by step. So look for some consolidation. Maybe if the trend holds, if the RSI holds, then maybe we can get a next leg on the upside. Too late to go long, I would say, right at this juncture for a short-term trader. Maybe a slightly deeper correction can help if the trend holds by that time. RRG graphs, however, is telling us no ways. If you're looking for any trades, then what it means is the momentum of RRG will improve, which means hit and run, quick long trades, get out. Do not go for positional long trades. The other sector which is there in the lagging is auto and realty. Let's quickly take a look at auto and realty. Auto is, again, just a bounce back on the weekly. Okay, it had quite a few lows over here, so it needs to deal with this fractal lows. Daily, again, with the overall markets, very, very similar behavior. It's created some kind of a consolidation in this area. As I zoom in, I can see that our new RSI indicator is prompting me that there was a positive continuation divergence, which is known as a hidden divergence. So it's important that we get this breakout and it should sustain. Looking at the bar chart, it behaved exactly the way the Nifty had behaved. So for auto, yesterday's, or should I say Friday's high is very, very important. This breakout is extremely important. If it doesn't come, then it will start to slip. It should start to slip. I say this because when I take a look at the RRG graphs, it is in the lagging quadrant. It's trying to pick up, but relative strength is not there. Relative strength is not there. So sorry, this is reality. I'm sorry, my mistake. This is auto. So it's in the lagging quadrant and it's losing. So not a very good chart. Again, auto you should put alongside the other two sectors of the metals and the pharma. If the market breaks down, these are the pockets to look out for shorts. What about reality? This was reality, which is picking up some relative strength momentum. It means that if we take a look at this chart, it should be an underperforming chart trying to reverse, trying to bottom out. Is that the case? We take a look at reality and we see, yep, we've got a bounce back. We've got a nice little sink on the daily time frame. And this is essentially the breakout level, 900 on the CNX reality. So short-term trading point of view, not bad. From a short-term trading point of view, not bad. We still have a bounce back. So step by step, you should take it. Not a table thumping, very, very strong reading. The good thing on the weekly chart is my RSI indicator is telling me there was a positive divergence down here, which has helped this move. The trend and momentum has gone positive. It has given you a deepish correction, which we call as TIMF setup. So overall, if you get this breakout, yep, this can be a bullish candidate. So reality goes there. I've not taken a look at FMCG and consumer durables. We'll do that right away. FMCG has given a very nice bounce back, but it's dealing with this zone on the weekly, these zones on the daily. And right now with Friday's close, it's just losing a bit of grip on the trend, on the super trend, and RSI is cooling off. Any kind of a bounce back can be an opportunity on the downside. But hit and run trades, please. Or better, just stay away from FMCG, to be honest. It's better. Similar kind of reading coming in from the consumer durables. It's just cooling off and the Heiken-Ashi has gone negative. The super trend has gone negative. This is early sign of weakness. Trend is yet to, support that, and RSI is also yet to support. So it's essentially a bullish chart, which is showing early signs of weakness. Better be careful. So stay away from consumer durables. Stay away from FMCG. Rest, you have some 3 or 4 sectors on the bullish bucket. You have around 3 to 4 sectors on the bearish bucket. Leave it for the Nifty to decide, was this a breakout failure? If yes, shorts will start to pile up. If not, it will probably stay volatile, consolidate, and then decide to give us a move. Amidst all of that, that's what trading is all about. Amidst all of that, all this uncertainty, you have to analyze and figure out what you're going to do. Do that, and hopefully it will all turn out well end of that particular trade. If not, there's always a next trade, right? Thank you, everyone. Do let me know if these kind of videos of the market analysis on the weekly time frame helps you or not, if there's anything that I can add to these. Till then, take care of yourselves and trade well the week ahead. Goodbye.